Dear students, in the previous sessions we have covered all the accounts related to single entry system like BR account, preparation of BR account, debtors account, BP account, creditors account, opening statement of affairs and cash book. Now here in this session you will learn the preparation of trading and PL account and balance sheet. So you're going to learn in detail the format of these two accounts, trading and PL account and balance sheet. This is the format for trading and PL account. So we prepare trading and PL account together. So first we prepare the trading account and then continue with the PL account. So in the trading account, towards debit side, we should start with always with opening stock. So to opening stock. So we start the trading account with opening stock towards debit side. So to opening stock amount. Next item will be purchases. We have certain adjustments with regard to purchases. So in the inner column, take two purchases less purchase returns if any, less goods withdrawn for personal use if any. Okay, if these two are there, you will have to deduct from the purchases. So when you take purchases, sometimes in the problem you will be given with cash purchases and you will find out credit purchases also. So taking purchases, you should take always the total purchase. So two purchases, cash plus credit purchase put together, less purchase returns, less goods withdrawn if any. Take the net amount to the outer column. Come to the credit side of trading account. Buy sales. In the inner column, you should take cash plus credit sales. So buy sales, inner column, total the cash and credit sales, less sales returns if any given. Deduct that with the total sales and take the net amount to the outer column. Then come to the debit side of trading account. After recording opening stock and purchases towards trading account, you should take all the direct expenses like wages, octroi, power and water, carriage inwards, factory rent, etc. These are all the direct expenses related to trading account. So take all the direct expenses like to wages, to power, to water, etc. Then come towards credit side of trading account. You should not forget to take the closing stock here. So by closing stock, take the amount. So what are all the items that you record in the trading account? Debit side, to opening stock, then to purchases with adjustments, then direct expenses towards debit side. Come to the credit side, sales with adjustments and closing stock. With this, your trading account will close. So you have taken purchases or opening stock, purchases, direct expenses, and credit side, sales and closing stock. With this, close the trading account and find out whether you get a GP or GL, gross profit or gross loss. So here we have taken GP. So to gross profit, you have to, whatever balancing amount you get, you should bring it down that GP to the PL account. So in the trading account, the balancing amount will be 2 GP carried down. Continue the PL account. Bring down that GP first and then continue the other expenses and income. So by GP brought down, bring down the balance of GP that we have balanced in the trading account. Now come towards debit side of PL account. Record all the expenses like to salary. So in the debit side of PL account, to salary, to interest paid amount, to depreciation. If any depreciation is given, you should take that expense also here. To rent paid, to bad debts or to RBD, to interest on capital. All these are expenses like salary, business expenses, interest paid, depreciation, rent paid, RBD, bad debts, interest on capital. Okay, come to the credit side for any income received. Any interest received or commission received will be recorded in the credit side. So this is how you prepare the PL account. So taking all the expenses and incomes. Now you should look into the question and see what are all the expenses and incomes indirect. And based on that you will have to record towards the debit or credit side. So in the PL account. So by doing so much you will get the balance as net profit or net loss. So close the PL account, balance the account and see what you get. So here we have taken net profit. This net profit will be again adjusted in the balance sheet. So in the next slide we will learn how to prepare the balance sheet. There you should take this net profit to be adjusted to the opening capital. Coming to the last statement, which is balance sheet. So this is how we prepare the balance sheet. So liabilities amount, assets and amount. So left side, liabilities, you should take adjustment of capital. How do we adjust this capital here? So take the opening capital. We have found out from the opening statement of affairs. So we have calculated opening capital by preparing the opening statement of affairs, which you learnt in the previous sessions. So bring down that opening capital here in the inner column. To that add net profit, which you arrive in the PL account. Add additional capital if any given. Add interest on capital. So to the opening capital, you have to add net profit, add additional capital, add any interest on capital given in the problem. Total in the inner column only. Less drawings, less interest on drawings, or deduct net loss if you get a net loss. Here we have got a net profit, so we have added. If you get a net loss, you will have to deduct here. So from the total opening capital of opening capital plus additional capital plus net profit plus interest on capital, from that total deduct drawings and any goods withdrawn for personal use. Deduct that here and take the net amount towards outer column. So this is an important adjustment in the balance sheet with regard to capital. So opening capital, add additional capital, add interest on capital, add net profits, less drawings, less interest on drawings. Take the net amount to the outer column. Then comes creditors. So you should take the closing creditors here. If any closing BP is given, bills payable, that should be taken here. And outstanding interest or expenses. So all outstanding expenses will appear in the liability side. Any bank overdraft you should take here. So balance sheet, you should adjust the capital and take all the other closing liabilities given. Coming to the asset side. So asset side, you should not forget to take the closing stock. So here, when we talk about fixed assets, for example, if buildings are given with depreciation, so buildings less depreciation. If appreciation is given, you should add appreciation to the fixed assets. If depreciation is given, deduct and take the net amount to the outer column, amount column. Then current assets, you should take closing cash in hand, closing cash at bank, and if debtors are given with adjustments, so debtors minus bad debts or RBD, you should take stock, closing stock you should take, bills receivable if it is given you should take, cash in hand, cash at bank, and outstanding incomes if any. So in the asset side, you should take fixed assets and current assets as I've explained you now. So the balance sheet has to tally when you go with the same steps. So follow the same steps and prepare the balance sheet, and it has to tally. Liabilities with amount, assets will tally. So here you have learned how to prepare the trading and PL account and the balance sheet.